Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh my gosh, I need to turn on the lights here. Hold on a second. Turn on the lights. Get the music going. Blow your ears out. All right. So today is the big day, the so-called Liberation Day. And the market has no clue what Donald Trump is going to do. There are like 3 different scenarios that have been leaked out in the press or whatever. The administration is claiming that they already made their decision a long time ago. Who knows? But that sets us up for a very interesting situation in markets. You can see here off of the open, it's not terrible, but it is pretty tight. There was also some large orders in here as well, though. So what you're going to get today is a day that is kind of range bound, but with a lot of activity in that range. So this is actually really good for scalping, except for that the risk on something happening and then it breaking out is super, super high. So it's kind of bad for scalping. I've drawn this before. Wait, where's my pen? If you were to look at, do this proper. If you were to look at a graph here, and this is like volatility, like intraday volatility. And this is opportunity. For scalping. Okay. When volatility is nothing, you don't want to trade, right? But then it kind of goes up like this, and then there's a point at which the volatility is so high that you don't want to mess with it. Okay. So, and we're probably like right here, right? So I would protect your accounts here. The worst thing, the thing that will just absolutely crush your spirits is being super active trader today and losing money and then not be able to take risks when the headline actually hits and you know what's going on and you have a really solid idea of which way it's actually going to go from here, right? So I would recommend just kind of saving your ammo. All right, let's go to the charts. So here in ZN, well, we had a pretty good, increase overnight yesterday. And during our session, it kind of reversed on us. It's actually interesting. The scenario that I was laying out yesterday played out almost to the T again. Can I show that? Yeah, let's show that. Here it is yesterday. So I was saying, well, I was surprised that it dropped all the way back down to here. But then I said, even if it does, there tends to be buying on the first day of the month. And so you probably will see a little bit of a tilt upwards. And you did see some of these points where they were doing that. So that did end up happening. It was kind of gentle. Okay. Anyways, that's where we're at in ZN. Overnight here, we are reaching yesterday's highs. So it looks like that people are hedging flight to safety risk ahead of this event. Okay. That said, S&P 500 isn't doing too terrible. They did recover the declines that they had yesterday during our session, but overnight they are declining actually a little bit below that, but not below the previous days like overnight action. So it's going to be very, very interesting to see if the S&P 500 decides to make any moves before. So the Trump administration, they're not saying anything until after the market closes. So we'll see if the market itself makes any big moves today. Okay, here you got oil, just kind of falling back a little bit after that big update 2 days ago. Gold looks good. Silver pulling back a little bit, and silver just being silver. Kappa in a retracement channel as well. So you see here a lot of markets just kind of waiting on this thing. The dollar is a little bit weaker this morning, and Bitcoin saw a little bit of decline yesterday, but then somebody came and saved it. But it was kind of trivial action in the long run. Okay, so let's make sure that we turn the robot on again. Yesterday, oh my gosh, I posted the picture of it. Well, I don't know, the way that it looks on the chart doesn't really matter. Big loss, the robot. So the situation that I was kind of talking about that makes me say it's not necessarily a good strategy did happen. which is to say, you get like a large meta order, right? And then the algorithm sees that and gets in. Hopefully you have it balanced to a place that it gets in early enough that it gets an okay spot. But as of late, it's been getting up in at the top of it, but then it holds it for an hour. And an hour later, you have a really good chance that there's another leg of the meta order and you make money. And what's been happening the past few weeks is that the meta orders that we've been seeing are really big, and so you get those multiple legs and the algorithm is profitable. But yesterday, what happened was we had a large meta order driving us up. A big portion of that was the flight to safety strength from equity weakness, right? Equities reversed, and so that flow reversed. And so you didn't get a second leg. You got a pretty much a full reversal, I would say. Or let's not call it a full reversal, a full retracement. And so the algorithm ends up eating the whole thing, right? So this is where it comes back to, there's some really, really useful information in the order flow. There is more statistical inefficiencies that you can take advantage of in the flows themselves than there is from price. Okay, there's all sorts of things that go on, like end of month rebalancing and different individual flows, and there's no way for you to separate those out just from looking at price, because there's too many things going on with price. So you have to have some way of separating those flows out. And one of the ways that we do it is we are understanding those strategies and what flows could be moving through, and then watching and identifying the flows ourselves. If we were a big quant firm, we would probably just buy the order flow from a bank, and that would identify different players and would tell us exactly how much is coming from different players and different sectors and stuff, right? Okay. Now we can differentiate it, then we can get these setups and we can predict these flows. So if you can predict the flows, then all of a sudden you combine that with the statistical abnormalities that we can find in order flow and everything to give yourself a good position and a really strong trade. But if you don't have that predictor of flows, then you're kind of at the mercy of whether or not that flow continues, which you can't predict very well just from the data that you're getting from the market. And so when that fails, it fails hard, right? But it was a good step. I do wonder if there are some better ways that we can approach this. You know, like just in this situation, for instance, today, would it work better to say, okay, if I get 55% in balance, then I do want to go long, but I want to wait for it to come back to 50 before I do it. You know? That could be interesting. But I don't know if I want to mess with that too much. I have been doing some Rust stuff. So I did, well, let's see here. Was my widget example? Yeah, so I was getting stuff to run. So I was able to make a widget that draws a square and, you know, make it show up twice. I also made one that is kind of more of a canvas. It was actually really hard to get that to go because the framework that I was using has upgraded and changed major parts of that stuff. And like none of the like online learning resources or anything like that reflects those changes. So I really had to dig deep into like the pull requests and all of that sort of stuff to figure out the right way to do it, in addition to understanding Rust itself. And I tell you what, man, if you try to get your LLM to fix those issues, it just completely falls flat. It's like, oh, fix this, and then it writes a completely different program. Crazy. So it was a little bit, I don't know, disappointing, just because it was like, well, if I had been doing this every day for 6 months, I'd probably be pretty far along in everything, but it's a long project, and it's not going to yield anything for us for a long time. And it is not a solution to my current problems. And in all honesty, I do not know if there is really a real solution to my current problems other than continuing to apply and hope that all of this stuff in the market works out, or that if it doesn't work out, that the pain is quick. Like if we have like a complete stock market crash in the next month, and then, you know, all that sort of thing, and then it's over, they bring rates put down to practically zero, and capital frees up again, and I'll, you know, within a month, I'm down for that. I'm totally down for that. But if this turns into like capital continues to be cautious, companies, the labor market is frozen, and it stays this way for multiple, you know, possibly multiple years, I'm so fucked. I'm so fucked. So yeah. Now the S&P 500 is kind of doing its thing already, so we might see a lot of equity treasury correlation today as well. Well, so anyways, on my side, if I am going to do a bit more programming on this, I'm trying to decide how I want to go about it, what I would like to do next. It'll be hard to create the platform, but nice that you're starting. Yeah. Well, so, you know, my main goal yesterday was just to get like the basic drawing stuff down, because I think that the first step of the project would be to make a working chart. And the first step of that is to get that stuff kind of like the GUI framework that I'm using, kind of get the basics of that. And I think I did that. there's this whole thing that I am kind of wondering about, which is like, okay, so here I got my widget. There are a couple of interesting things. I wonder if that size bit is necessary. But then there's this draw. Okay. So draw is how it draws. And are there all of the functions and everything for widget, or like updating the widget and things like that? Or should I not be doing it through a widget? And when I'm doing this draw, yeah, I'm not. So there's the other one. Now let's do it over here. This one. It's not. Let me open up another big shell so that you can actually see. Because the code that we got here so far is not. No big deal. Okay, the canvas example. Yeah, so in this one, there you get a canvas. So I put a canvas into the thing. And then there's the draw method. So it's drawing a bunch of different things that I kind of put in there to mess around with. But then it is using a cache. There's a cache here. And it looks into the cache and it draws on the cache. And so I guess the cache will kind of say, like, I don't need to redraw this, so I'm not going to do anything. So that's like the first question that I have in my mind is like, so can I use a cache in the widget class, trait, whatever? And I should be doing everything for my quote unquote chart in a widget, or should I just be doing it in a canvas? And I think this is a question for more experienced ICE developers, so I might need to find like a Discord for them or something like that. And then there you get to all sorts of other interesting questions. So actually I was going to wonder so like let's add another tab here. So 32-bit float equals 4 bytes. Don't forget to activate. I did. Thank you. Which data? I'm using Rhythmic. Well, so at first, so the question is like about the data feed. And we're just not dealing with that. We're going to put some data in a file and load the data from the file and draw from that and build off of that first. Okay, so 32-bit float is 4 bytes, and that means that an individual candle is 16 bytes. Open, high, low, close, right? Now let's see here. I forget how many minutes in a trading day are there? The standard trading day is 390 minutes. Okay. So that is 6,240 bytes per day. Times 90 days. For 3 months of data. Okay. But that is still just 0.5616 bytes. So that's good. That means that you can pretty much put all of the data, chart data, on the heap and draw from that and be fine. So then probably what I do is I just take a chart and export that data into a CSV file, and then load up that CSV file into like the data structures that I'm going to use. Interesting. But that does come into like my big kind of roadblock, which is I know that I should be able to interface with Rhythmic directly, but what I would really like to do is use Rhythmic plugin mode. And is it really possible for me to use Rhythmic plugin mode with Rust? But it seems to me... Oh man, my gut's hurting this morning for some reason. I always get into this debate with myself in my head as to whether I should try and bear through it or... Stefan, do you use limit or market orders? Depends. It really depends. I would say that I have a tendency to favor market orders. So here's the thing. Should we segue to this for let me finish the thought that I was on before I go into that full spiel. Yeah, so what is it called? The one with the fancy order flow pictures. Bookmap. Bookmap is written in Java, isn't it? Bookmap is written in Java, and I saw stuff on the web about Bookmap using Rhythmic plugin mode. Let's see here. Bookmap, Rhythmic plugin mode. ChatGPT thinks that it can. Yeah, here it is on Bookmap's knowledge base. DX feed for stocks. tick the plugin mode checkbox, and it, yeah, okay, so it does support plugin mode. And bookmap is written in Java, right? Yep. Because the API is Java. So I think that if you can get it to work in Java, that I can get it to work in Rust. Is just the question, like one of the things that I hate is that you don't get any of the documentation or anything unless you're already paying for the Rhythmic API. So, which is about $100 a month. We could presumably do that, but I don't know if that's something we want to do just yet. Probably I want to have like a really good working chart first before I dive into that stuff. Okay, so for whether you use market or limit orders. So if I am executing a large meta order, that is, I'm working at a bank and they need to buy like 100,000 treasury contracts before the end of the day, and how do you do all that and yada, 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 okay? If I just sit there with limit orders and compete with everybody else for the fills on the limit, I'm not going to be able to execute that many orders. I'm just not. So those big guys, they have to do at least 50%, if not 80-90% of their orders are going to be market orders. Okay. If the thing is that if I am using a market order has that impact essentially, right? Like I'm taking up some of the liquidity out there. So if I'm an informed trader and I'm taking a trade and I think it's going to move up, there is a kind of this thing that is like, there is a slight advantage for me to use a market order. But I'm giving up a tick if I use a market order, right? I'm giving up a tick if I use a market order. So right now, for instance, in ZB, that 1831, well, it already changed. Moved too fast. So now I don't have a really good example. But when I look at the inside bid and offer, and I want to see which one is smaller, because usually it's the case that one is much smaller than the other, right? Like in the 30-year, it'll be like 50 contracts versus 800 contracts, right? Okay, like right there. So if I wanted to buy right now, it would make sense to hit into 31. Okay, now that it's ticked up, if I want to buy, should I hit into 119 even? Well, there's so little liquidity here at 31, and it's been going back and forth across it so many times. In that situation, I would probably put the limit order in and wait for the limit order to get filled, because I have a very, very high probability of getting the limit order filled at 31. You see what I mean? So there are some things that I can kind of use about the way that order flow, the stylized behaviors of order flow that I can use to my advantage. Okay, and one of those is that they tend to create liquidity holes, which is to say you get an area, price will rest where supply and demand are at their minimum, and so you get this place where they're not really willing to put up a whole lot of liquidity at any one time there, and it just trades back and forth across that one price over and over and over and over again. And so if you really want to get into a position in that situation, then you should just put your order in at that price, whether it's a market order or a limit order. Okay. Now, the downside to that is that if it's in that situation, it's likely to be stuck there for quite some time. So you do kind of have to ask yourself, why do I want to take this trade now? Like, what really makes me think that there's going to be a flow coming in? Just some food for thought. Okay. Another thing that you can use, even if we're kind of like we're starting to trend up, is if I can hit into it just as it ticks up, like right there at 31, okay, then I can be long and have a bid behind me at 31. Hopefully, it's not really holding the bid there at 31, but you know, if I wanted to scratch at 31, I have a pretty good chance of being able to do it. Right? Catching the edge. Another one is if there's an iceberg. So with an iceberg, basically what's happening is people are, like, let's say that people were buying into 31, right? And you might see the offer be really low, like 500 contracts, but they trade that 500 contracts and then 500 more get added back on. And it keeps doing that. And you might see 5,000, 10,000 actually trade here before they're actually able to tick up and through, right? And so that also, I think, affects the way that you might want to execute, right? Like if I want to sell, then it really makes sense for me to join the iceberg, because there's a very, very good chance that I'm going to get executed on the limit because they are filling that iceberg. Okay. Now you can be careful because when they go through the iceberg, there is a little bit of a tendency to kind of pop a little bit afterwards. Okay. So those are three things that you can kind of use that will help you determine whether you should use a market order or a limit order, or which price you should use. Now, that said, they are pushing the high end of the range. So this could be interesting. Something that's kind of been happening is that there's kind of this strange dichotomy, I guess you could say, in the spread, where there are a lot of steepeners on, but the market has actually kind of been flattening. People still want it to steepen. Like if there was like real economic calamity here, then probably the yield curve would steepen, but that's not what's happening. It's flattening. And so it kind of, when we're moving like this, got to keep an eye out on that spread, if the spread is doing anything, because that could give us a really big clue as to where the flows may ultimately be going. What I'm seeing right now is something that it looks like that there is a slight bit of pressure in favor of buying, but nothing too dramatic. So there might be, I would be cautious about just buying this on the theory that it's just going to absolutely take off. I think right now you might kind of get a little bit of a head fake. Like it might make a new high by a few ticks and then settle back down really quickly. But I can see the level 2 activity, especially the way that those bids are stacking behind us, kind of suggesting that the robots are here to play. I don't think in this situation that means that there's going to be a trend, but there's probably going to be something. There's probably going to be something. Well, let's just rest for a little bit and watch this. And then... While that's going, I'm going to check here to see if there's like a Discord or something. There is. Oh, and there's a YouTube channel too. I wonder, new rust iced chart. Is there somebody else's chart? Plotters iced. Good, good. Okay. Source. They have a widget.rs and they have a chart.rs. Look at that bid at 31.5. Okay. I feel like that it's early enough in the session that like it could be a legit sign that we're going to continue trending up. But I'm a little bit suspicious of this one. It seems like that the market is a little bit suspicious about this one. It is not just directly leading to a ton of people chomping at the bit to buy and stack it further and everything. You got to be careful about those because sometimes they can put that big bid on there in order to coerce people into market buying, and then, you know, they actually have a limit order there and they're filled and then they're done. They drop their order and it declines. So the earlier in the session that it is, the more likely that it's for real. Okay, well, they just were able to trade down. I'm looking at this plotter's iced, and in their draw function, it is draw, right? Yeah. They don't do anything with the renderer. They just say renderer dot draw chart. So it is in chart. Is there a draw chart? Public trait renderer, draw frame with cache. Now this is good. This what would we call it? Component widget, whatever, is not super huge. And so it does give me some things that I can kind of reference. I don't think it's going to be perfect because probably let's check their cargo. Oh, they are version 13. And I'm 13.1, so that's good. Excuse me. Mouse interaction. Oh, and when it says self.chart, that is of type chart, right? Use. I forget what the where clauses are about. I think that this is saying we got a struct. It's a chart widget. It's got these things that you pass into it. So it has to have a lifetime, a message, something of type message, of type theme, of render, and C. And then they say where C is a chart with a message. because there's lots of generics involved there.
Block buy.
Ah, there's some buy-in. There it is. Okay, so we had like the big stack and it kind of fizzled out, but then they got above that and I can see some more aggressive. So in this situation, if I wanted to buy, am I likely to get filled at 112.00 half? It's maybe a little bit dicey. So this might be one where you might use the market order there, right? I'm a little bit concerned about my robot here because it does look like we're starting to get a pretty good trend here, but we are really far away from the 57% imbalance that would be necessary for the robot to trigger. And so I think that it's going to be super late to the party. Because I'm looking at it right here at 01 and I'm kind of questioning if it really makes sense to buy here. That would be a much more clear imbalance and trend than I was expecting today. Plus, we're just before the S&P 500 opens, so that also kind of makes it dicey. The robot would work better as an overbought, oversold. I think that if you took the signal that it's using, forget about the exit part, but just took the signal that it's using and you reversed it, you said when it gets to the 57 or 60 or whatever percent you set it to, that it takes the opposite trade, I think that it would probably be just as unprofitable. Right? It's the same issue that you run into with most price-based signals, is like sometimes it continues through and sometimes it reverses. And how do you know which one it's going to be, right? Now, presumably, the more short-term that you get, the better of a mean reversion signal it should be. I do kind of feel like that if you're hitting 60%, that you should be able to get at least a few ticks at, you know, decline, you know? Yeah, it's buying during climax volume events. Well, so I wouldn't say it's explicitly always supposed to be during climax events. So like one of the things that I find really interesting is that when I set it to 60, that was like the top. Okay, so I brought it down and now I haven't seen one where we got 60. You know? Oh, no. If you did it at 50, it would trigger too often. So if we had it at 55, it probably would have triggered there at 112.01. Something that I'm finding interesting about it is that the events that we've been seeing this week are really fast. So like there's one thing where it's like, okay, they're buying a little bit, and then once it's been 10 minutes, and then you can see that like 55% of the volume has been net buy, and then it triggers. But what's been happening instead is there's not a whole lot of volume. It's 50, and then all of a sudden there's this huge tranche of buying that's so buy that it like so much bigger than all of the volume that was traded before it, that the indicator just instantly hits the 57%. So we should be careful, one, to not overfit to the current conditions, right? But what it's kind of doing is it's kind of showing us the challenges that we have to kind of work with. If it was like, if I had a predictor of order flow, like if I gave it, I think that there's going to be a meta order I want you to buy, but I want you to wait for a certain amount of imbalance first, then I think I could possibly get away with as low as 2. Like it could trigger in at 52%. That would have gotten it in over here. That would have been pretty good, you know? But 52% is going to hit a lot. So it would only be like, I know there's a meta order there, and then I can buy it, right? Now that said, it hasn't ticked back on us yet either, so. But that's also why I kind of wonder, should it be, like, wait, I don't know. So what it could do is, okay, at 57.5, instead of that triggering it to get into an entry, that just triggers it to wait for a pullback, for instance, right? But I don't really like that kind of. I want to catch the first move, you know? I want to catch the first move. But another thing we could do is say, well, two things. One is we could do it with this current one and use it as a mean reversion signal, but just only be looking for like 2 ticks. That's one thing that we could do that I think would probably work pretty well, or that might work pretty well. 2 would be put it on a shorter time frame. Right, like do it on seconds time frames. I kind of think though that on seconds that it would just be too unreliable. So I don't know. But what I'm kind of hoping is that if I combine the imbalance with a bunch of the other things that we've got, and you know, machine learning, that maybe machine learning will kind of sort out some of those cases so that it will kind of say, well, I don't just want to get into it on the imbalance in this situation because that's a situation where it's really likely to retrace. Like perhaps you could look at the R squared of price and say, well, if R squared of price is already at 80%, then I definitely don't want to get in now. But if R squared is low, is like below 50%, then you're getting a really good sign that there could be some further for it to run. Right? There's those sorts of things. But with all that said, we should keep in mind that before yesterday, it was doing amazing, right? So a lot of it is the market conditions, right? So really, I think that the better thing would be like, instead of, okay, that's a point where it's going to mean revert and I'm going to take it short or something like that. I would rather have it be, I already got into a trade, and when I get that signal, I get out, right? Like, that's kind of been my observation. Most of the things that we've investigated, that when you find a point in which the market is interested in it, that's like a good place to be exiting, not a good place to be entering. Okay, well, with that said, I remember kind of saying, well, they're like right here on the highs, but I'm a little bit skeptical of it. That was a pretty good push, but it is retracing really quick. Like, it is back to the 112. So that says to me that we are still correct about the conditions. Now, part of that might be the S&P 500 for the first 2-3 minutes here has been all buy. Although not on super strong deltas, so I don't think that they've really decided on a direction yet. See, no, it's funny because the setup that I've kind of been theorizing, it's about to happen here, right? So it didn't get triggered into a trade. The imbalance wasn't high enough to trigger it into a trade. But if you had it set at like 55%, let's say, right, would have been triggered into a trade. Now it is coming back to the 50%. So, do you want to catch it on the pullback here? Or do you think that it's going to pull back all the way to the cost basis, which is all the way down below the opening range of 25? Probably we just follow correlation with equities. So that's another thing, is that if it's flight to safety flows, then I don't know if the order flow is really going to give us very good signals. You know what I mean? Because you're not actually getting large meta orders in the form of this guy has to buy it today no matter what. Yada, yada. No. You're getting large meta orders based on somebody's doing something in ES. And so I don't know if you really get a whole lot of information about those meta orders and how likely they are to continue and yada, yada, yada from looking at it, the order flow in the treasury. And you're looking at the order flow in the ES, then you get into the issue of there's so much going on over there that... So, it was kind of interesting, though, that it did not get to the 57.5. Chart of type message. Oh, the render code is not in here either. Pass it a draw function. So that must be what the... Oh, is that what the renderer is? No. This is really flipping hard, man. In fact, we are getting a situation where the meta order on the downside is larger than the meta order on the upside. But I still think largely being driven by equity correlations. You're getting the delta, yeah. I mean, if you had known that it was gonna come back, that's like the situation that's my favorite. Except for that, I don't think that there was really anything that we could have known that would have predicted that counterflow. Unless you thought that the S&P 500 was going to buy strongly on the open. Eek. They could not break the high? Was that not? That was the high of the day. I mean, like. Some perspective, right? We broke yesterday's high. We were at the highs of the day. We had an okay move. It's now reversing. It's mostly just reversing that move. Hey, if this is flipping around, like if this is a true reversal and not just a retracement, this could go so much further, right? Recenter. I think it's missing something. I'm not finding the part in this framework where it actually does the drawing. Maybe it's this part right here, which would be weird that it actually happens in, oh no, in renderers. So the widget adds the chart adds the renderer, and then it makes some call to the renderer to make the lines. Why? Okay, so I'm hearing that Iran is ready for indirect talks with the United States. I saw a little bit of weakness in oil there, but nothing too crazy yet. That could be a really good thing for, well, how do we say good thing? It depends on your perspective. It depends on which side of the trade you are, right? But that could cause a little bit of a decline in oil, but it doesn't look like it is. Also, I am seeing the treasuries moderating a little bit now that they're at the lower end of their range. Can see this going one of two ways now. One is I still think that we're likely to have like a relatively range-bound day. So it could be one of those things where like it goes back and forth across this whole thing multiple times. Those are like some of the craziest, hardest days for me to trade. But it could be something bigger going on here in the S&P 500 and the treasuries just continue to sell off for the rest of the session. I would say that the stacking on the offers behind this move is pretty strong. They're all 4,500 or more, which is way more than what was being put on here on the way up. The way up at, oftentimes it was like 35. In fact, with the way that this is all played out, do we have to rethink what that spoof was? Because I was kind of like suspicious of it, and then after a while, it didn't really do anything, and then we did get an uptrend, but then it was very, very brief and it reversed. So maybe it was like a bit of a spoof. They did trigger a buying spree, and it was just a much stronger buying spree off of that than I was expecting. But that it was a spoof to try and, you know, collect some contracts for short. Possible, at least. Can't know for sure, but seems like a decent theory to me. Thinking back on this Rust stuff, there is a canvas up here, right? Yeah. In here. Should note that the liquidity is a little bit weaker through here. This is a little odd. Is that the market makers overall just reacting to, you know, they expect more volatility than usual? Hmm. Okay, there it goes. And that's touching the cost basis now. Interestingly enough. Ooh, I don't know. Like, is it going to bounce here? Is like, really doesn't seem like that would make much sense to me. I would expect it to keep going. But maybe that makes it a good place to look for a bounce. I don't know. Or the ETH. What is the ETH VWAP? question. Is it in the same place? 25 half? Oh, okay. I have found in these situations that like they tend to be close, but I think that that's just the function of volatility and stuff like that. Because a lot of the back testing that I did was about what it was, what the cost basis was in relation to the VWAP. I'm kind of getting curious now about our algorithm, if I can. Oh, okay. Okay. Oh, you know what? I'm so silly. I totally forgot about ADP today. US ADP was expected to come in at 120K and it came in at 155K. But then there was buying after that. It looks like the initial like knee-jerk reaction was to sell it, but then they quickly recovered and then they started buying into the session start. Huh. GK says, hey, welcome. I think I have this fear sometimes when I'm doing back testing that like a back test that I haven't touched in a while, that I will have changed things enough that it won't even run correctly anymore. So I'm kind of nervous to come in here and wait, why are they not both showing up? This didn't compile, probably. Oh, yeah, I need the namespace. You ever looked into real r/real data? Nope. Sounds like a scam. So we're just getting factory orders in durable goods. Factory orders slightly above expectations, spot 6 versus 6.5, and core durable goods at spot 7, in line with expectations. I am seeing some movement here, so maybe it is due to that news. It does, right? Well, I kind of say everything sounds like a scam, right? Like, so I'll give you a few little heuristics you can use here to help you judge any kind of service or strategy or thing that you come across in the day trading community, right? The first number one thing, and this really isn't so much a heuristic as it is just the way that you should approach things, is you should look for empirical evidence. So can they show you empirical evidence that the behavior that they claim they're taking advantage of actually exists and isn't just random? So that's what most people fail to do, is they say, oh, here's a strategy, here's how you do it, yada yada. Okay, but what's the empirical evidence of it? Like, can I systematize that and then go back and back test it over 5 years? And most of the time, no. Or even if they can't do a strategy, they can say, well, the market has a tendency to do this. Well, can you prove that it actually has a tendency to do that? Usually they can't. So that's the first one, okay? The second one is, do they make claims of profitability, essentially? I know this seems like super crazy, but basically, if they're out there shoving in your face, look at how much money I made, or look at how much money these members made, yada, 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 that is like straight up an FCC violation. Federal or FTC, Federal Trade Commission, that kind of are the ones that manage things like deceptive advertising. Basically, their standard of things is your advertising, the results that you're advertising should reflect the average customer. So if the average customer does not make money, then you cannot advertise it as that you're going to make money from doing this, essentially. And in markets, the majority of people have to lose. So you will never get that. As strong of a program as I could give you, we have a lot of really good information here, but it's still Probably more than 50% of the people that try are going to fail. That's just the nature of the market, right? Has nothing to do with the quality of the information. So if somebody is going out there and they have this website and all of the testimonials are, I made X $1,000, and they have like numbers and things like that, that basically means that they don't know what they're doing. Like, they don't realize that that's an FTC violation. I've always harped on this from like the very beginning. And, that's like what Warrior Trading got caught for. Essentially, that's why they got sued by the government. So that's like the other really big warning that I would look at, right? Yeah. They heavily push consistent profitability. I think the whole thing of like profitable trader is like really a funny thing, because it seems like a concept that just kind of organically developed amongst retail traders. But again, if you've really been trading for a long time and you understand that the actual statistics about this, not just the statistics for trader profitability, but the statistics for how the market behaves and things like that, this whole idea of you are a profitable trader makes zero sense. If I go and I take a bunch of guys and just have them trade randomly, and over a year's time period, like 40% of them will have made money. So this idea that like you come in and like I had a profitable month and now I qualify as a profitable trader is just so stupid. Most of the people that you're going to find claiming to be profitable traders were just lucky. Like, this just the stats, right? Oh, and when you go out to a higher time frame, like, what percentage of people are profitable over 5 years? Well, randomly speaking, only about 30% will be profitable after that. Okay, but in the real world, we find those numbers like less than 5%, maybe even less than 1% when you get out to 5 years. Like, of all retail traders that have tried trading futures, how many of them have made money every year, 5 years in a row? Probably a handful. Right? So past performance is not indicative of future results, and the whole idea of like a profitable retail trader contradicts that, So I wouldn't read that one as so much of a red flag as much as it is. It just kind of tells you where it came from, right? These are retail traders that they think they had something from their retail trading and they're putting out to you. It probably means they're naive, right? It probably means that they had some success, and so they're like, oh, I'm going to go and make a program for it, and yada, yada, yada. And then they find out later that it was just random, and their ego's not going to let them accept that that's the case, or they're just already too deep into it that they'll never be able to admit that it was just random. The guy that created one option is a Pit CBOT guy. Yeah, that's still quite early. So I saw this thing the other day that I really thought was really interesting. So like, this guy was talking about how different types of marketing work for different types of products. Like, if your business is B2B, which is to say you're a business selling a service to another business, then going out on social media, on TikTok, and talking about your product isn't going to help you very much, right? Like that's not typically the way that you market those things, right? The way that you do that is you have salespeople and they call the businesses up and talk to them, right? And so he was saying, like, why do all of these influencers and everything always end up like selling a course or whatever the deal is, right? Well, basically what happens is they have this resource, which is their following. And whatever it is that they're doing basically ends up having to morph into a business that works well with that medium. So if you start, maybe you started out as B2B or who knows, and then you built the social media following up, and what do you do with that? Well, now you're just going to have to create products that are going to work well with that format, with that medium, right? And a course that is reasonably priced, course, is kind of like the best product to market that way. It is. Now day trading kind of ends up being an interesting case because, well, if it was really that great of a strategy, wouldn't you just trade it? Well, yes and no, because if you really had an amazing strategy, you could just trade it and presumably you'd be able to like make a living off of it. And in that situation, you wouldn't want to tell anybody about it. But the reality most of the time is that even if you have an edge, it's a super teeny tiny one. And like a really, really great, you can be a really great trader and have a tremendous amount of edge and still have a hard time making enough money from the market to live off of it, right? And so then you do need to diversify your income. And so what do? Well, I make indicators. These are all tools that I use for my trading to begin with. So I think that was an easy one. Or you make a course. Yeah, I'm kind of weary about the whole idea of making a course for me. Like I wouldn't call it a course. I would just call it a book, right? But if it was a course, I think that it would have to be like a week long. Geez, I don't know. It would be like a week long seminar series where we do a live stream sort of a thing, but it's more like a Zoom share, and you guys can ask questions and stuff. But then I don't think that one really makes sense, because how would that be different from what I do every day here on the stream? Doesn't make sense. Yeah, I should just make a book. But a book is a big, big project. I hope this isn't annoying. No, this is all we're here for, man. This is all we do. My BS meter has a very high sensitivity. Well, I like in general, my approach would be so here on this channel, I do not have like a strategy for you, right? Like we'll make strategies and we'll back test them and do all that sort of stuff and everything. But I don't have something that's like, I give this to you and all you have to do is follow this setup and then you're going to make money. That again, it doesn't make sense if you understand the market, because the market's competitive. So I'm trying to teach you things that will help you create your own strategy and will kind of help you dig in the right places, right? Like the market is very statistically efficient, but not very informationally efficient. So what that means is that there's probably going to be more edge, more easily available for you, looking at informational inefficiencies like following the news, breaking news stories, etc., etc. But those aren't going to be as reliable. And meanwhile, if you're trying to like look at a chart and find some systematic strategy that works in all market conditions, it's going to be extremely, extremely, extremely hard to find. If you do find it, then you probably be rich and you have really good consistent income. But they're like almost impossible to find. Did they make claims of profitability? If so, what does that look like? Yeah. Like if you had somebody that showed you like 5 years of tax returns, that would be really interesting. I've never seen that. But then that's the other thing that I would say is the strategy, is the thing that they're promoting a purely technical setup sort of a thing, or primarily technical? Probably isn't going to do much for you. Now, if they're talking about, I'm going to teach you all about macroeconomics and all of these key things that you need to, then that would be a different thing, right? That's the sort of thing that I guess a course I would put in a course, but it would be hard. Oh, I don't know. I could do it like, okay, what if I charged $5,000 and it was a week-long seminar, and the week-long seminar included all of these things about macroeconomics and stuff that we talk about. And if I was able to get just even 2 people to sign up for it, then I would be able to justify spending that whole month preparing the content for it. Because I got all of the stuff there. It's all up in here. I talk about it all day, every day anyways. But like getting it organized into like a condensed course like that would be a different thing. What do you guys think about that? And I wouldn't call it a course. I would call it a week-long seminar. It's kind of something that's like, I don't know, man. It's really tough to say. So like, I think so with this idea, I mean, this is basically what the No BS day trading guy does, right? So it's a week and you just watch him trade. Basically, but I think it's basically like what I'm doing here, but I do it for free. And I've always kind of felt that was like, get the free No BS course first, and that's good. If there's any like course out there about futures trading especially that I think is worth purchasing, it's that No BS basic day trading course. It's only like $120, so it's not even super expensive. Okay, and then it's like, if you've read that and you've been watching the order flow for a while and you're still struggling to understand how this all works practically and everything, then you get the course, you know? But what I'm talking about is kind of more understanding the economy, understanding the market on a deep level. It's information that I've kind of always said, like, it's really important, but like compiling it all into one resource is really hard. And you know, it is just a lot of time. And this could be, like, I've always talked about making a book. This could be a way to this could be a way to bootstrap basically the making of a book. What do you guys think about that idea? Should I make a poll? Should make it like yes, no, or yes, but I can't afford that. Yeah, no, let's do that. I think that'd be interesting. Engage with your audience. Hard to pull. Okay, there. I was starting the poll. Would you enroll in a week-long Speculator Seth seminar for $5,000? Yes. Yes, but I can't afford that. Or no. It should be solely based on trading around new release, if then type stuff. Well, that would certainly be one of the things that we would talk about. But I think that there is in order to be able to come in and like, okay, there's a news release today. It's non-farms. If non-farms is this, then this happens. And if non-farms is this, then this happens. In order for you to be able to successfully trade those sorts of things, there is a lot of background information about the market that you need to know. Right? So I think that the primary focus would be giving you all of that background information. So I think, like, let's see, how would we... I was this month in dollars. I guess I can't afford it. Oh, so let's see. It would be 5 days, right? And I think one day, I don't know if it would be first day, but first day would be, let's just start there, would be order flow. Which would basically be giving you all of the hard information that we have about the order flow. That basically leads us to this, the market is very statistically efficient, but not informationally efficient, and understanding why that is, right? So then somewhere in here, there would be news or economic releases. Right. You know, I wonder, oh, I have a whole... Make a new directory for it. How about that? Let's call it seminar. One full day should be dedicated to making fun of Uzi. Assets is in there somewhere. Madame has now performance issues again, so hard to fix that. Oh man, yeah. Well, like the whole thing is that it's in WPF, right? Like, there's weird things about the way that WPF works, and making something hyper performant in WPF kind of ends up being a little bit, because it's like the way that WPF works is like you have a model and a view and a model view. So like your model would be all of the data behind that saying like, here's what the DOM actually looks like right now. And it's supposed to be you change the model and then the model view tells the view to update, right? But you've got, in some instances, possibly hundreds of values that can change at any second. How do you sort that out, right? Especially if it turns into like every tiny little update causes it to refresh. That could be impractical. You might say, hey, I'm going to update 250 times a second. But there could be, you know, in one of those updates, multiple things could have changed, right? That's hard to do in WPF. I really thought I had something here that, for a book. Oh, that's right, GK. I remember the cookie cell thing. That was explaining how the order flow book works, yeah. Well, I do think it would be and I think it would be an intense thing, yeah. Well, so far we got 8 votes. One person says yes. 4 people say yes, but I can't afford that, and 3 people say no. Which is just understandable. We need a second one. If we get 2 people to say yes, then we could totally do it. But maybe I kind of flesh out the outline here a little bit better first. I swear I had something. Where can you trade in stocks or commodities, futures, grid neutral? Okay, so it's been a long time since anybody's asked me about this, but it keeps coming up. This is something that kind of like tries to go both ways, right? Oh, this is maybe something different. You know what? I don't think I've looked into that particular strategy before. it kind of sounds like it's something that is market making by taking on managing multiple contracts and managing an inventory in a market where you expect it to be range bound. Man, we made so many stream logs. Okay. I do think there also has to be a certain amount of industry stuff, right? Oh, there's a way here in there's a way in Helix to do this. What's the name of the course you recommended? Oh, you're talking about the No BS day trading course? That's another thing I should do. Look into what he's doing. NoBSDayTrading.com. Courses. Bang. So he has a basic course that includes an ebook and a bunch of videos. And it's $84.95. And I don't know. I have an old version of it, so I don't know how much he's changed it and everything. But the book is great. It's 100% worth spending $85 for the book. And then the video kind of goes into a lot of things. The videos that it comes with, rather, comes into things like the way that we have our DOM set up and that we have the 3 major treasury instruments and things like that. He talks about that sort of stuff in that. So I would call it a pretty basic course, but when you get done with it, you have a pretty good idea what order flow is, and you have a pretty good idea of what order flow is, what you need to do to like actually get started trading in futures and all that sort of stuff. And he doesn't mess around with you. He's not coming in and making like grandiose promises. He's very realistic about what's actually achievable with day trading. But it's the best resource that I've ever come across. It was kind of how I started, and I think it's a good one. So I think I'm gonna develop this idea further, because when I've dismissed this in the past, it was always kind of like, well, how are you going to do it that it's going to be worth that much money? And but I think what we should do, you can do online courses would be nice. Yeah. I think so. So one of the, well, there's a couple of things going through my mind all of a sudden from now, right? But like, oh, the app. Yeah, the app that I'm using is called Heal. It's a text editor. It's a text editor a lot like Vim or NeoVim. And well, so if we did this, if we did this seminar and we just had a small handful of people, and we could run the seminar every month. But what I'm thinking about right now, you know, this is really interesting. Maybe I've just been kind of, I guess one of the things that's always bothered me is that there are people out there offering courses and things like that, and there's a lot of question as to whether or not that's really worth it. You know, really have to question what those are worth. Especially just like courses. Like I've seen so many things online where they're like, okay, how good is this guru's course or whatever, and you buy their thing, and it is just like not worth it. I'm wondering, so like a good example of that was Max Pats. Is that what it was called? Price Action Trading System. Max Manuals. Get your copy today. $100. Okay, that's not that crazy. $100 is not crazy. Nadro was a pretty big waste to me. Yeah. And some of the other ones, we might as well. I'm not. I hate like talking about other influencers and spending. So that's another thing is we were talking earlier about like red flags. If you get an influencer and all they do is spend all of their time trashing on other influencers, that's also a big red flag. A lot of narcissists and manipulators, one of the ways that they will manipulate you is by putting everybody else down. So it's kind of a big red flag for narcissism. But there's kind of this caveat, which is that in day trading, most of the stuff out there is BS, you know? So I try to avoid talking about that stuff. I try to speak about it more generally and not talk about specific people, you know? But since we're doing some market research, Oh, you know what? I really need to do this with an incognito window because I hate when I do a search on YouTube and then it starts showing me all these recommendations for it. Okay, so one that I've heard people complain about a lot is Humbled Trader, and Learn to Day Trade. Right here, she has a link. Oh man, it's got. It's another thing is I really hate. Am I the only one that's like this? When you come to these landing pages, and it follows this certain template. Like I'm pretty sure that there are like courses that you can buy for online marketing that kind of give you this template. Right? It's like there's multiple different sizes of text and I can't stand it. The Basic Guru webpage. They have a community membership, $1,290 a year. Oh, I thought she had a course that you buy. Now it's more a community. Okay, now let's switch over to somebody that, you know, I respect. I've never taken their courses or anything, but Axia. Axia's got a whole thing, and it's pretty cool. Let's see here. What are they promoting right now? Elite Trader Workshop. Reserve my seat now. Doesn't show me the price. That's another thing that just drives me nuts. Is that when they won't tell you the price, like until you've like entered all of your card details and everything. Yeah, the vendor sync was at Futex, that's right. I think the difficulty with Axia, I think that Axia probably can be cited as like an example of profitable trading, profitable short-term trading. There's lots of people at Axia doing lots of different things. And you know, then if you look at one individual trader at Axia and how do they actually trade, and what about their trading is actually making them money or not, and how do you sort all of that out, right? In terms of the discussion of like who's profitable, what's a profitable strategy, etc., right? Because everybody wants to cite a particular guru as an authority as to why they're right or why what they're doing is right, instead of looking at the market, you know? It's just like, oh. If we come back to this Axia trader training, maybe 6-week trader program, 6 month. Wow. Next course in 48 days. It's a multiple week thing. Here you go. Online, 3,000 euros. What's that in US dollars? Oh, that's almost right on. So see, and Steffa says, I think I like Axia a lot, but I think it's overpriced. Yeah. Yeah, Gary Norton's Red Jacket course was 2,000. I am kind of thinking maybe $5,000 is too much. But I don't know. There's a couple of so here's another thing is like stcusa.com. Just as an example, Series 3 Premier Plus, $500. This gives you a book, and actually, I don't think you need the Premier Plus, do you? Yeah, no, you just want this one. $342. This is the I've taken this. Actually, I have it right here. Securities Training Corporation Series 3, and the Series 3 exam is for trading futures. So like I've taken this Series 3, passed it, I could start like a commodities trading pool or something like that, right? And they are giving you a book and a bunch of flashcards and like tests that you can take. So it's actually a lot of content for $350. And this is a course that like if you worked for Goldman Sachs and they wanted you to take the Series 3 exam, this is where they would send you. And they charge $342. So that's interesting. Yeah, Amesh says that for $5K there are seminars that will fly you to a nice city. Yeah. So going back to here, I kind of wonder how much time you need. You know? So like if you make it a 5-day seminar, but maybe, so there's, I think that there's, okay. Let's do a couple of things here. I kind of like this idea all of a sudden because like I was saying, so man, I'm being really ADHD, aren't I? Because there's like 4 things that I want to talk about here. One is, it's always bothered me. There's a lot of courses out there that they don't sound like that they're really worth it, right? And that's primarily because the reason you take the course is to become a profitable day trader, and no course is going to give that to you, right? And so they're charging this exorbitant price that doesn't really make sense. Okay, so the way to solve for that is that the content itself should be worth the price of admission. Like I want to learn about this subject. It's worth it to me to spend X $1,000 to know it, even if I know that it's not going to guarantee that I make money. Okay, fair enough. Fair enough. That also means it's not necessarily going to be for everybody, right? Like a lot of you guys that are here every day that already understand a lot about macroeconomics and the different economic reports that are coming out and all of those sorts of things, you might not get as much out of it, right? But for somebody that's just starting out and they want it to really have like the most complete thing, and with somebody sitting right there to walk you through it, it would be a good option, right? And if we price it right, we don't need tons of people, right? Okay, so number 2 thing is, what would the format be? Should it be like every day for 5 days or X hours a day? Because I'm kind of thinking about like, okay, like how much content can I get through during a normal live stream? This is like 3 hours, you know? I'm thinking, so if it was every day for 3 hours a day, okay, then 15-hour course. it could be more than that though, right? Like if it's into the point where I can spend my entire time on that, it could be every day for 30, or well, not 30 days. It would be 5 times for 20 days, 3 hours a day. That would be a lot of content. I think that might be hard for me to put together that amount of content, but we'll see. But that might not make sense. I don't know. Like, not everybody can come in and do a thing like every day. You're right. That doesn't necessarily make sense. Okay, so what if it was every Saturday for 4 to 8 hours for 4 weeks? What if it was that? You get a week to digest what I just gave you. You can come in on the stream and ask questions, blah, blah, blah. Then on Saturday, you do the course, because that's a lot of time, right? That's a lot of time. I think that would be cool, though. I think we could do that. The thing that interests me about it is that there is definitely this gap where it is like all of that knowledge about that market, all of the stuff that I've just picked up from reading CNBC and Zero Hedge every day, working at a bank, watching the economic reports, watching the flows, seeing how things tend to go. Oh, yeah, somebody's going to call me today. Cool. You know, it's like a lot of fractured knowledge. And I think that if you were here on the stream like every day, that you would pick it up through osmosis. But it's kind of one of those things that's like, as we go along, it's just like it was pertinent this day, and so then we talked about it, right? And I would really like to get something that is in a everybody, it's all in one spot, so that you have everything that you need to know. No, I don't think that we would do it as a I mean, at least not at first. At first, it would be an online webinar. Like, we would use the webinar, whatever software. Because I think Amanesh is probably correct that for $5,000, just based on our basic research that we've done here, you could be doing an in-person thing, right? But I like this idea because I want to have that resource for people, and it's just like, it's a lot of time and I don't have the time to sit down and write a book, like write a whole book and everything. But then it's like, but if that's all I was doing for a month was writing that, 100% I could do it. And I think that it would really probably start to turn into, I can't include everything. You know, so I do think, so it's just going back to here, like the industry part, that would probably be a lot of the stuff that you would learn if you like were to take the Series 3, Series 65, is just the whole thing about, so like here, we would talk about different industries, futures, stocks, options, investment advising. Investment advisors, funds, right? It's going to be a lot of detailed information about like there are things about like the different types of fees that a fund can have, for instance, right? Whether the fee is upfront or, you know, there's also those sorts of things. I think that those are relevant things to know. It's not like, well, how is that relevant to like that individual trade? Well, you probably never. But as background information to understand how funds work so that you can predict how the funds will behave, very important. Very important. I think a face-to-face meeting is so much more powerful. Yeah, well, and that's why I think that it would be more like, I wish I could change the poll. But what we'll do is I'll write my outline here a little bit more detailed, and then we'll say, okay, $2,000. Yeah, how would you convince people to sign up based on the things you mentioned before? So actually all of the information that I would be teaching would be information that you can verify is true. Because a lot of the things that were, like, just for instance, this first section, industry, right? This is telling you about the regulations and how the industry actually works, how these businesses actually work, right? So that's stuff that you can prove. You can go and look up the laws and stuff, right? Order flow, this is going into a bunch of studies. So order flow would basically be a crash course on this book. which and it would be pretty much the content that's already in my order flow playlist. Okay? But done in person over 4 hours or whatever. Probably, I think 4 hours makes the most sense. I don't know if I can fit all of that into 4 hours though, with people people there asking questions and stuff. Would be hard, but you know, it was just so if I were to like really do like I think I could do a college course with that book, and then going through and like deriving every equation in the book and things like that. That's probably like a 2 semester, like a 2 semester sort of a thing. Like it would be be a big course. That'd be different. But for this, we would simplify it down and just give you the main things that you need to know to understand what you're looking at and how the market tends to behave, right? I think that these two probably should actually be so assets here would be equities, orders, treasuries, bonds, metals, energy, grains, maybe I should teach order flow last. I don't know. So the sorts of things that I would be talking about here are like, okay, we have treasuries. There's an auction once, a couple times a month. Right? Auctions. There's all this information for us to learn about auctions. It would be that sort of stuff, right? For these other ones, it would be like what are the reports, what are right? Like that's the kind of stuff that I put in there. Okay. Macroeconomics. Interest rate cycle would be one. Which kind of businesses do well? That's really the primary one, but I'd have to think hard about the macroeconomics of it. And why should people trust you? Well, I guess it's a fair question, right? Just wondering, how will you iron out this marketing need? Yeah, well, so I think that at first it would just be, we have a certain amount of audience that they're already, they already know me and they're watching, and they understand my knowledge of the markets and my experience, and so they trust me enough to take a course like this. And I'm being pretty, this is what we're going to talk about, right? And I guess that's also why I come back to this thing that's like, well, see, if the marketing was, I'm going to take this course so that I can become a quote unquote profitable day trader. And then the question in your mind is, can Seth make me a profitable day trader? Right? It's kind of like doesn't work. Because most people aren't going to be profitable, right? But if it is, here's the knowledge that you're going to get, and here's why this knowledge is going to be pertinent or is going to help you at least stand a chance at being a successful day trader, then it's a different thing, right? And so I think that the thing that is going to be like, why should people trust you is I'm showing you like the complete thing, right? This is the information that you need to know and how it's applicable to what we do in day trading. Because I think that that's a hard thing to market. I'm gonna have to think about how to market that, because basically, like, my argument here is the market is more statistically efficient. Excuse me. The market is very, I don't know. We can iron it out tomorrow. I got to get going. Okay. We'll have another poll tomorrow. Okay. I will see you guys tomorrow, and then in the meantime, stay excellent, team.